Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, September the 9th, the year's 2024. Let's talk trading. Weekly open and gap with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And just a reminder, risk management. Never lose more than you're willing to lose on any one single trade. So welcome back, Walmal.
Yes, it was a nice time away. Get down to the lake.
So,
do a little fishing.
According to the dashboard, all the open gaps have filled. And you can see the weekly is below the previous week's midpoint. We're 23 pips below that weekly open, now 24, 51 off the high, 19 off the low. And if we zoom out to the monthly, you can see we are out of the upper wick zone of the previous month's candle and 35 pips below that monthly open, 147 off the high, 19 off the low. And we exited the opening range for the month. Notice that we got back into it, but we're putting in the opening range for the week, but we crossed that opening range and we're now below it by about 28 pips. For the year, 380 above the yearly open, 174 off the yearly high, 793 off the yearly low. And once again, looking at the monthly chart, we are within the previous month's candle body, and that inside bar from 5 days ago was also the opening range. So once again, we're outside that opening range, or in this case the inside bar range, by about 26 pips below that 131.20 level. And looking at the dashboard, there's just a handful of inside bar trades at the moment. And so far, the range for the pound is at 70, but you can see the yen pairs and the New Zealand pairs seem to have a lot of range, most of them over 100 pips, with the exception of New Zealand USD, only at 62. And for the buy zone, you can see we went up during the Asian session, coming back down during London across that weekly open and through the short zone. Rats, the range is large enough, and right now it's time for green rats to feast. And let's see, and you're right at the edge of the original rat zone and about 4 pips above the smart rat, or as Walmart likes to call it, Rat Tui. 2.0. Bambino flex indicator said to go long. Bias near the pivot, according to the pivot trading plan, is short. We haven't hit the pivot or the weekly pivot so far, so we'll just have to wait and see what happens. But bias near the S1 was long. And we penetrated S1 in the last H4 candle, but now we're about 12.6 pips above it. So following that little trading plan, you'd be in the money. Once again, we missed the daily pivot by about 17 pips so far. And we've missed the weekly by about 9. And we're missed the monthly by 53, but and that monthly pivot's at 1.3020, and we're heading down that direction. In and out of that lower wick zone from the previous day's candle, or previous trading day's candle, which was Friday. Looking at the range, smart ranges for the week, 70 pips so far, 0 percentile over the last 12 weeks. We did not break out of the previous week's high. We broke out of the previous week's low by 15 pips so far. Other than that, nothing earth-shattering. And looking at the trading screens, you've got the simple. And so far, the M30 ranges, the last two, we had 17 and 14. So, Walmal, you're done for the day, though, right?
I am done for the day. I actually took a trade while we were sitting here, but and I got 2.5 pips on it, so I've got 22 pips for the day. So that's not a bad day. Although I did get myself into a little bit of trouble. Not that I did anything wrong, just market guards weren't smiling on me for a little bit. And went against me, and I had to go and make those pips up. But hey, that's part of trading, and stick with your rules. Be safe about it. But I said to you before that it's kind of interesting that the range on Friday on an NFT day was 129 pips, which is a big day nowadays. And we said, "Oh, look at that! The NFT really moved the market." Meanwhile, in the old days, 300 pips. But that's can't live in the past.
Yeah, I know. We're dinosaurs, right?
Exactly.
Yeah.
And I think the market right now is kind of, it's, even though we got a 70 pip range for the day, as you had already said, the reality is the market's kind of in a holding pattern, because next Wednesday, the FOMC is going to go and announce whatever rate cut or non-rate cut that they're going to go and do, and how big it'll be or not be. And so I think a lot of people are kind of sitting on edge a little bit.
That's this Wednesday, right?
Next Wednesday. It's the 18th.
Oh, okay.
So people are already starting to prepare for that, I think.
Right. Yeah, and looking at the trade reminder here for the monthly, we've got a lower high and a higher low, so monthly inside bar. Weekly, though, we've got a lower high and lower low so far. And it says sellers are in strong control. And on the daily, we've got price turning down, and we're below the lower wick zone of the previous day right now. We have not expanded that year-to-date range, accumulated range, 967 pips. Oh, and shout out to Stan. He gave me a call this weekend. He was asking about the higher wick zone and the lower wick zone indicator that I came up with. And it's kind of funny how some things just repeat, and then you'll see something. It's like, why didn't I see that, like months ago or weeks ago or years ago? And it's just, I think it's just a matter of screen time. Are you still in a trade, Walmal, or are you out? You said you got your...
No, I'm out.
Okay.
I am definitely out.
Because it looks like this price might want to test that 131 level here.
Yeah. Yeah, and that would put us back into the wick zone, the previous day's wick zone. So it's sort of, it's going to be a little bit of a challenge to get in there. If it does get in there, do we turn the day positive? I don't know.
No, the previous day's wick zone's at 131.10. Day three's wick 3 days ago was 131.01.
Right. I'm talking about getting to 31.29, which would take me into the body of Friday's candle.
Oh, okay.
That's what I'm talking about.
Okay.
So escaping from the other side.
Right.
But and that's the thing. That's the thing about we were talking about wick zone trades. A lot of people think about wick zone trades, and they think about escaping to the escaping out of the, let's say if you got a tail on it, escaping the bottom of the tail. Well, sometimes escaping is escaping back into the previous day's body, and you can use some nice trades that you can get going into the body as well. It's just, something that you got to pay attention to.
Definitely, definitely.
Because you can come out of that wick zone. The wick zone's got two sides.
Yeah, yeah. And you know, the thing is, there was a trader asking about the flip-flop boxes and the bar two trades, and they were saying how they got cut up. And I think one of the things is, if you look at some of the traditional, oh, we just hit 131.01 on my chart. If you look at some of the traditional trading techniques or knowledge or teachings, they'll talk about accumulation and distribution. And, some of us call it support resistance, and some of us call it supply demand. But one of the things is that price will range for a while, and then price will break out of the range. And I think they say it's about 70% of the time price will range, and 30% it breaks out. So when you're near an edge or any of those zones, doesn't matter what you call it, if price is quote unquote broken out, it almost have to let it establish a new range. Then you can start to look for a reversal trade. And that's what some people, it's just that patience. It's like when I used to joke, and I still do, it's like all I have to do is wait an hour, because I'd get in a trade and it would go against me and go against me. And if I just waited an hour and it would come back down to that level, then I would have not experienced all that, aggravation, frustration, pain, whatever you want to call it.
Yeah, you're exactly right. And we have to just be mindful of that. It's sort of like, I know people who question, I'll go and put a line on a chart and say, that's if I'm in a trade, that's my TP, that's where I'm going to get out. Well, why are you going to get out there? Because if it breaks that area, then it's off to the races. You're right, it's off to the races. But at the same time, more times than not, it gets caught up and gets sucked into that area and doesn't move out of that area sometimes for, like you said, an hour or more.
Yeah.
And I look at it from perspective, get out now, take your money, put it in the bank, come back tomorrow, look for another trade.
Yeah, so like right now, we exceeded the higher wick zone on the 1 minute from the way I've got it set up. And if you were look left, it's all blank, and you go, oh, you might think it might be going up. But all you'd have to do is switch time frames. And so I just moved it up to the 5 minute. If you look left, you can see it went to an area, and then kind of it barely broke through, hit the 31.01, then it came right back down through these wicks over here. And
exactly.
Those upper wicks say sellers push the price down, the lower wicks say buyers push the price up. And it's like, well, hey, if they pushed it down before, they could push it down again. Of course, it could break up and go to the next level, but you can just see clearly what's going on once you know what to look for.
Yeah, that's the thing, And some people may say that's hairy hindsight, but it is hairy hindsight when you're looking at it from a closed chart. But the thing is, you can spot, sometimes, with experience, you can get a spot and make pretty good guesses, because that's all it is a guess, as to which way it's going to go. And, based on experience and seat time, what can happen is you actually wind up making good guesses. And, I was complaining before to you that my efficiency today was 78%. Now it's 79% because that latest trade, and you said most people would kill for that. Well, what's the difference between me and somebody else trading the same method? The only difference is the amount of time I've sat in this worn out office chair.
Yeah. And you know what? We've just about worn out the fastest 15 minutes in trading. So, fellow traders, I hope you're profitable so far this week, this month, this year. And when you come back to your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.